Thank you for tuning in. This is Nadeem. You are watching Empire Diaries, your independent news platform. Today we are going to talk about something that affects you and your wealth: bank charges. Rupees 10,000 crore. That's the amount of money that banks in India collected from their customers between 2016 and 2019. It was earned as penalty for not keeping minimum balance in their accounts. Here's another story. After 2 years of losses, India's biggest bank, SBI, brought back the minimum balance penalty in 2017. It immediately earned Rs 2,400 crore. Later in 2019, SBI posted profits. India is home to millions of people who are too poor to keep some money parked in bank accounts. But for the past few years, the government has been pushing the public to open bank accounts. The result of this grand plan of financial inclusion is that banks are becoming richer and richer at the expense of poor people by collecting minimum balance penalty. In fact, this Rs 10,000 crore collected as minimum balance penalty is only half the story. There is a long list of charges that banks quietly impose on account holders and make pots of money. It's a silent heist and it's been going on since the push for digital banking. Anyone who has a bank account in India, be it with one of the 12 public sector banks or the 22 private sector banks, has to pay bank charges. You can't avoid it. Have a look at all the bank charges that you have to pay. Cash deposits and withdrawals at bank branches. Cash withdrawal from ATMs. Issuance fee on debit cards. Annual charge on debit cards. Balance inquiry at ATMs. Mini statements at ATMs. Regeneration of ATM PIN code from branch. Transaction declined on debit card due to insufficient funds. SMS alerts from banks. Change in address. Change in mobile number. Change in KYC documents. Cash deposits and CDMs. Change of mutilated and old currency notes. NEFT and RTGS transfer of funds. Surcharge on use of debit cards for buying rail tickets and fuel. Checkbooks. Demand draft. Balance certificate and signature verification. Slapping bank charges to compensate for banks' own financial problems is not a smart practice, because a large number of Indians trust local banks and keep their small earnings in accounts. Banks are struggling to handle mergers, privatization and NPAs or bad loans. But why are they directing their anger at you, the customer? From what has been happening in recent times, the rise in bank charges appears planned and not random. Right from the time of demonetization in 2016, the government said it wants the public to start moving away from cash towards digital transactions. It's not that the Indian economy was in good shape in the past or that poverty was not an issue. The point is, while we are pushing for financial inclusion at a crazy pace, the country's poorest people are getting impoverished at a speed never seen before. Banks don't have their own money. It's the people's money that they live on. It's time we wake up to this reality. Banks are meant to serve the people, not the other way around. For more such reports that matter to you, subscribe to our YouTube channel and visit our website empirediaries.com. News is not what you are told, but what you are not. So stay informed, stay tuned and spread this message.